Thanks for watching. Please like and subscribe my channel. A promissory note that provides for payment of interest only during the term of the note would be a straight note. A contract of sale passes. Only an equitable title. The seller under a land contract is sometimes called the vendor. The instrument used to remove the lien of a trust deed from the record is called a deed of reconveyance. When there has been a default under a trust deed, it may be foreclosed by trustee's sale or court procedure. Once a lender commences a foreclosure under a defaulted deed of trust by trustee's sale, the lender will receive the proceeds from the foreclosure in approximately 4 months. When real property is encumbered by a deed of trust, the naked legal title to the property is held by the trustee. The maximum reinstatement period on a trust deed and note that is under foreclosure is up to within 5 business days of trustee's sale. A forced sale of a property is made at a foreclosure sale and brings a total price of $200,000. If the balance of the first trust deed note is $160,000 and the balance of the second trust deed note is $60,000, the holder of the second trust deed will receive $40,000 less foreclosure costs. The inclusion of which of the following clauses in a deed of trust permits the loan to be paid off at any time without a penalty? An or more clause. A trust deed differs from a mortgage in which of the following respects? Title to the property. When a deed of trust is foreclosed through court action. The trustor has a 1-year redemption period. After a trustee's sale is conducted and the property sold to the highest bidder, the trustor has no redemption or reinstatement rights. Which of the following best defines a purchase money mortgage? A mortgage given as part or all of the consideration for the purchase of the property. When a loan is obtained to purchase real property, and a note and trust deed is executed, the party that furnishes the funds is the beneficiary. The thing that distinguishes a first trust deed from a second trust deed is the date of recording. When real property is encumbered by a first trust deed and note, the trustor has possession of the property. A seller of a home agrees to take back a second trust deed on the sale of her home but wants to make sure that the loan cannot be paid off in the first 3 years. In this case, the loan should include a lock-in clause, a trust deed is signed by the trustor. A deed of reconveyance must be executed by the trustee. Federally chartered savings and loan associations doing business in California are regulated by the Office of Thrift Supervision. The interest rate on a conventional loan secured by a first trust deed and note is usually about the same as the rate on an FHA or DVA loan. The maximum amount guaranteed by the Department of Veterans Affairs on a $100,000 GI loan is $40% of the loan. commercial banks are interested in liquidity and marketability in their investments, they prefer short-term loans. Which of the following is a characteristic of mortgage companies? They operate primarily as loan correspondents. The Federal National Mortgage Association, FNMA, was created primarily for the purpose of buying GL and FHA loans from lending institutions to stabilize the mortgage market. The Real Estate Settlement Procedures Act prohibits the payment of a kickback, a lender would not be at risk if a new building project were not completed if the lender was making a takeout loan. If you have prospective buyers that want to obtain an FHA loan to purchase a home, you should advise them to contact an authorized lending institution. One of the key factors used by a lender in qualifying an individual for a home loan is the adequacy of the borrower's income. The completion bond that is often required as part of a construction loan is issued for the protection of the lender. Which of the following is a source of real estate mortgage funds for home loans? Federal Savings and Loan Association. A contractor is building a new condominium with a $200,000 construction loan. The terms of the loan provide that a percentage of the funds be released at various stages of construction. Under this type of loan, the monies released would be referred to as obligatory advances. A CRV is used in conjunction with a home loan when dealing with the Department of Veterans Affairs. The term impounds most nearly means reserves. The loan-to-value ratio on real estate loans is the ratio of the loan amount to the appraised value. Which of the following financing terms are synonymous? Interim loan, construction loan. The largest source of financing for junior loans available today is through private investors. An increase in the discount rate by the Federal Reserve Board has what effect on the money market? It makes less money available. The CalVet program, which aids California veterans in the purchase of single-family residences, is financed by the sale of state-supported bonds. Thanks for watching. Please like and subscribe my channel.